You don't have to, and zero interest rates essentially zero out time. And when you zero out time, everything just proceeds and drifts along in the way we've seen the economy drift in Japan and now in the United States as a result of this zeroing out time. So, but not only do you zero out time through the government monopoly of money and the imposition of zero interest rates, it slows growth rather than spurs it. Not only does it do that, it also suppresses innovation. As Hayek put it, the root and source of all monetary evil is the government monopoly of money. And Matt Ridley said that the government monopoly of money not only suppresses innovation and creativity, it not only retards growth, it also fosters inequality. Because what we have today is a kind of bifurcated economy produced by the government monopoly of money that actually fosters inequality. Because think of most of us. Most of us are paid by the hour, by the day, or we're inexorably caught in the economy of time. That's how we get compensated. But what's happened in the world economy in recent decades as a result of the government monopoly of money and the exploitation of that government monopoly to allow almost unlimited expansion of government power through the creation of money is what's happened is a financialization, a kind of hypertrophy of finance in the world economy. And the hypertrophy of finance escapes time. It's at zero interest rates, after all. And so it results in a lot of bidding up of existing assets because the opportunity cost is registered to be zero for spending or today. So essentially, the result is a bifurcation of the economy where the flash boys engage in millions of trades an hour, increasingly a minute, and the rest of us are caught in the economy of time. And the epitome of this hypertrophy of finance is the alternative to money as a measuring stick, which is floating currencies. Now, floating currencies, international currency trading now proceeds at a rate of around $5.3 trillion a day. Now these are the numbers 3 years ago from the Bank for International Settlements. They're going to issue new numbers shortly, and there are estimates that this has drifted down during the course of the recession, but it's somewhere around $5 trillion a day, which is about 24 or 5 times global GDP. It's 73 times global trade in goods and services. It's by far the biggest activity in the global economy. About 98% of it is speculative. In other words, it's not involved directly in trades of goods and services. 77% of it is conducted by 10 big banks. And It's almost all divided between London and New York. And it's a scandal because it doesn't even deliver a measure of economic activity, a measuring stick that's less volatile, more stable than the economic activity it's supposed to measure. So it's a scandal of money, a $5.3 trillion a day scandal of money. And that is, and the result has been across the capitalist world a big expansion of finance compared to the time-based economic activities, which represent the reality of our economy.